Welcome into the bunker. Today we're going to be talking about stocks, risk assets, selling off, plunging right now, getting bought up a little bit here on the dip. But as you know, my base case has been for stocks to go lower from this high here. Although I made a headline video the other day that said the bullish case for stocks was the mainly because I wanted to be fair. I wanted to be try to be unbiased. But most of what I said in that video is that the only way that the market would go higher from here is basically if we had a rigged market. And even that, I don't think will get us higher. There's just too much happening that really is affecting risk assets here. And I just wanted to take a look at a few of them on the charts, and then we can go through a few zero hedge articles for a few headlines that I thought were appropriate, I guess, for today. If you take a look at Tesla here, this is on the weekly chart, and we had this massive blow off top, and then we had a lower high and now another lower high. So again, people are pretty. This is probably because it's the biggest asset bubble of all time in terms of stock market. This is the child of that asset bubble. Tesla is like the prime example of a stock that was sort of a combination of a meme stock, Kathy Wood, and I think even people jumping on top of that after they were wrong for so many years, because the valuation makes no sense. I mean, it trades at I think like 200, price to earnings ratio. Historically, you want that to be around 10. So it's really the reason that people pile in on it is because Elon Musk, he has all these other interests and things that he does. He obviously just took a stake in Twitter, and that kind of pumped the Tesla stock. He always is figuring out another, in my opinion, sort of like Ponzi to get people to invest more in his company, in Tesla. And I almost feel like some of the stuff happens with the chart too. If you look at like some announcements he makes, and he comes out and he's trying to get that last pump every time. He wants just another pump. That's just my opinion. I mean, he might not pay attention to it at all. There was an announcement, I think, that he sold a bunch of stock, like somewhere around this top, I think. But again, this thing has ran so much, and I think it's the poster child for the bubble. And so I have a put on this, not financial advice, but my put I think puts us out at about 523. So I'm looking for somewhere around there, especially if we break this trend line. This is a strong trend line ever since the pandemic, and I think we will break this, even though we broke it here, and that was like I guess support. I don't think we go for it again and hold it. Um, People could say like, oh, it might be a double bottom. Okay, so we kind of do a double bottom, and then maybe we go from there. That's possible. But let's take a look at some other stocks here that are doing the same thing. And I think that you have to watch and kind of look and see what's going on in different categories of assets. This is also one of the biggest assets in the world, which I've been watching. And Apple, again, putting in continually putting in lower highs here. And we're getting picked up here a little bit on this support. And I think it's possible that Apple acts a little bit more as I guess people I think want to look at Apple and look at it as like a safe play where they can go, because it's almost like a utility now. Like everyone owns Apple. Everyone knows that everyone's going to own Apple in the future. But I don't think that necessarily means that it has to stay up at like this $3 trillion level of craziness. I do think that it has more to give back. And again, I do have puts. I actually sold some of them today because I was up so much. I mean, some of the stuff I had, like Microsoft, was up like 100% on the day. I think the Apple put was up like 50%, like all these like, 80% gains. It was crazy to think about that in just one day. So I was like, oh, well, I probably should take, some chips off the table, and maybe I'll just keep doing that on the way down until we potentially get there. Because it's hard to bet against the stock market. It really is. I mean, it's not easy. This is like, top level stuff. And to be, someone that I think reads the charts more than I read the news of these companies, I think that actually helps in this scenario because it's just kind of obvious that we're making this lower high here. I also wanted to look at Bitcoin, of course, the other poster child of the asset bubble. Bitcoin's a little bit different because, I guess people could qualify it as like outside of the US stock market system. And so if there is a new world order, which that, apparently will be, according to now mainstream news, if there is that, with the financial system and India, partnering with Russia, we have, we obviously have Syria and Russia, we have China and Russia, kind of forming this like alliance a little bit. And I think that the US kind of is forming an alliance with like Australia and Canada and Europe. And in my opinion, those countries are sort of going more towards this totalitarian mindset, unfortunately, which, and people, obviously the media and people will tell you that China and Russia are just as, bad. And I'm sure they are, but I think that with the ESG stuff coming in with the US, it's going to be more difficult for people to invest in these markets. And, Bitcoin is not ESG friendly. So I think that Bitcoin sort of leans more into the, Russia, India, sort of China alliance almost more than it would the totalitarian ESG sort of electrification movement of the US. And again, this is a pretty good support to sort of fall back on here, which is like around 42. But I do stick with my case that I think what will happen here is that we'll sort of bounce around a little bit more and we might flatten out. Okay. So if we get down to these lows and we don't bounce immediately up from these Bitcoin lows here, and we sort of hang around here for a couple of weeks like this. So if it goes kind of like this, and then it goes down here, and then it goes sideways for 2 weeks, we're kind of we're flirting too much with this box, right? And obviously, if we take this wedge, and that brings us to like $800. That's not most likely not going to happen. But anything's possible, I guess. Especially with something that like Bitcoin. But I think that there are people who are just hodling forever, basically. So they are sort of setting a floor. I don't think that this is the hodl floor. I think the hodl floor is probably more around like 20K to like 14K when we started rallying from here. So I did also, I guess I have another trend line that I've drawn in here, like around that level. I could see us kind of going down to that around like 25. People get really scared saying like, we're definitely going to 20K, all that. And then maybe that's kind of where we bottom out around there. So keep an eye out for that. These are just a few examples, but why the sharp sell-off in stocks and bonds? Because apparently like everyone thought everything was priced in, but a Fed official, Brainerd, came out yesterday and basically said we need to hike higher, or we need to basically start quantitative easing a little bit more, as well as like, potentially raise rates more, I guess. And so if this is nothing, well, I think what they're trying to say here is over the past few weeks, there was a lot of lazy buying of growth stocks as economic concerns pervaded into value cyclical stock sentiment. It felt like the NASDAQ was due for a pullback following the 18% rally from March lows. We saw more profit taking over the past few days. So there were people, trying to be bullish, the pundits, saying that there's all this cash on the sidelines and that, the economy's good, the savings rates are good. And like, they always have their headlines. And this is a headline driven market. And I do believe that we are going to have more and more negative headlines coming through with inflation. They might rig the inflation numbers, but I don't think that they can rig them to actually matter because the economy, the people on the street are affected by actual inflation. And so it doesn't really matter what number they put out because we see on the street, it's actually like 15%, right? Or more on some cases. It's not 8%. Okay. So that's a completely rigged number. Everyone knows it at this point. You can go to shadowstats.com. John Williams, I think, does that. And he basically just calculates it out as it would be in 1984, the way they calculated it back then, which would actually put us, I think, more around like 15%, like I said. So they obviously have over the years changed the way that they calculate it to make it seem like there's not as much inflation and they're not, and so that is sort of what is going on with inflation. Another thing to look at is, basically, I think Dullard, who, or Bill Dudley, I should say, NY Fed president, said that if stocks don't fall, the Fed needs to force them to fall. So, basically what I want to conclude with here is that the Fed isn't going to allow new all-time highs in stocks because that would just be like the worst thing to sort of have happen for them because they're supposed to have more control over this inflation, this like crazy environment. If you actually thought that stocks were going to all-time highs in the face of that, in the face of inflation, in the face of the fact that the Fed has to like look good by saying that they're stopping this crazy money flow that's happening. So they want markets lower. Like they literally they're going to force markets lower, and we're already at the top of an asset bubble that is completely out of control. And so financial conditions need to tighten. If this doesn't happen on its own, the Fed will have to shock markets to achieve the desired response. So hopefully you guys got something out of the video. If you did, please like down below, please subscribe, and have a great day.